Imagine a situation where your friend asks to borrow $200. You give it to him under the condition that he pays you back within 1 month. The 1 month passes and he pays you back the $200 in full, no problem. Several months passed, you guys still keep in contact, but then all of a sudden he hits you up and asks for 300. It's a little more than last time, but you agree because he was good for the paying back the original 200. Under the same terms, you told him that as long as he pays you back within 1 month, you're all good. But now the next month passes, the day comes, and he hits you up and says he needs an extra month. You reluctantly agree because you don't really have a choice. And then the extra month passes, and on the day he's supposed to give you the 300, he does, but this time he gives you an extra 50. The reason he gives you this 50 is because of the fact that he was late on the last payment. You graciously accept the 50, but now the next time he asks for money, you're not sure if you are willing to give him the same amount. Maybe the max to give him is 100, maybe the max is $50, or maybe you don't give him anything at all. This is a really bare bones example of how the structure of credit cards work. Today I want to go more into depth about what they are and how they function. So here's some general information on that. So a credit card is a piece of plastic or metal that is issued by a bank or financial institution that comes with a credit limit that the consumer is able to spend on within the limit. Purchases made on the card that are paid within the next month before the payment is due are not charged interest, but when you miss a payment is when you start to accrue interest on the card. Credit cards are usually used to make purchases of large amounts of money, of products that cost a lot of money that the user may not have enough direct cash money to pay for. They're also used by people who know how to maximize the rewards. So credit cards are really common in the modern society. According to Forbes.com, 84% of adults all own the credit card, reported in 2021. However, according to CNBC.com, specifically referring to Gen Z, they stated that 50% of all Gen Z owned a credit card, which was more than what millennials had in the same age range. So these cards are all issued by major bank networks like Visa, MasterCard, and Discover. So there are many credit cards, but there are three main popular ones, or three most common ones, and they are the following. So the first one would be cashback. These cards specialize in cashback. They'll usually have categories that'll give you a percentage back. So like 3% on dining, 5% on travel, 2% on gas. You can rack up these cashback points, and then eventually you can redeem them when they accrue a lot, or you can do small increments. And the next type of card would be travel. These travel cards usually offer points instead of direct cashback. These travel points still can be used to redeem for cashback, but they have a lot better value when you redeem them for travel, meaning flights, Uber, Airbnb, or car rentals. The next type of card would be a secure or credit builder card. These cards are used when a user doesn't have any credit history and they're just starting out, or maybe they did have a credit history, but it was a negative credit history, so they're trying to build it back up. So now that I've given you a glimpse on some general information on credit cards, I want to go more into the positives specifically. So as I stated before, there are many advantages to having credit cards, including rewards. So those rewards you can rack up and spend and use on a large sum of money on a product that you may not be able to afford otherwise. You can save up as much points as you'd like and redeem for cash back. And then you could also redeem travel points for fully paying for flights through those points, and you essentially don't pay anything out of pocket. There's also welcome bonuses that are offered by these cards, and it's an easier way to get a sum of cash. For example, the Chase Freedom Unlimited offers $200 when you spend $500 on the card within 3 months, which is pretty easy to achieve for most people. So another benefit about getting a credit card is it helps you build credit if you use it responsibly. If you use the card responsibly, lenders will give you a lower interest rate. It may give you a lower interest rate and may be able to loan you a larger amount. A good credit card history and usage also means a higher limit. That could be an increase on the current card or a larger limit on a future card. So student loans have a negative impact on your credit score, and being able to have a responsible and good usage of credit cards can help offset that. So another benefit is that credit cards are generally safer than debit cards. This is because the credit cards aren't your own money. According to Michigan.gov, states that credit cards are zero liability for fraudulent charges. And then they also state that the refunds on fraudulent charges usually take a while, could take up to several weeks. But on credit cards, it's not as big of an issue because it's not your own money. But on a debit card, it is, and that could be really detrimental to be losing your own cash money. And then credit cards are also better to use for websites that are a little more unknown, that are not as trustworthy. Because again, if you get your information stolen, it won't be your own money, it'll be the bank's. So although there are many advantages to owning a credit card, there are a lot of disadvantages if you mishandle the usage of a credit card. For example, debt. Debt is a big issue in the United States as a whole. According to moneynews.com, the total amount of credit card debt in the US in the 2023 is $995 billion. So it's also dangerous that you could form a bad habit with the credit cards. You may end up getting a large balance and regularly miss payments, which is really not advisable. And then when you miss these payments, it damages your credit history as well as your credit score, and it's not good in any aspect. These missed payments will make a lower score, and when you miss too many payments, it'll impact whether a credit card company will even offer you a credit card. Another negative is that you may want to open too many cards at once. Opening too many lines of credit is also a negative impact on your credit score, and you may be chasing welcome bonuses, and this will all lower your credit score in the long run. So the most impactful negative on a credit card is the interest charged on a balance. You may miss a payment, and then that's when this interest will accrue, and the interest will continue to accrue until you're able to pay off the full balance. But the issue is when you have these high debts, the interest continues to add on and you don't pay it. It becomes extremely hard to pay off the balance because you're too busy paying off the interest. So this is a brief review on what a credit card is, what are the advantages, what are the disadvantages. And I don't know if you may have known this information or some of it, but I hope that I was able to provide a basic understanding of what they are. But I encourage you to do your own research to form a better opinion and have more knowledge about the world of credit cards. Thank you.